So let's just dive a little bit deeper into sort of the very specific case of trading against order flow. Now, again, obviously there can be a lot of variables to this, where we are within the higher time frames, what all of the time frames are doing, et cetera, et cetera, et cetera. So I just want to give you kind of just one very sort of, basic premise in sort of which to apply it. And that is basically, if you're going to get in, let's say on the M1, and you are trading against the bearish M15 order flow, right? But you're anticipating that the M15 order flow is going to shift bullish, right? But instead of waiting for the order flow to shift bullish, so this would be your IBOS, right? So you've had a series of larger internal lower lows and lower highs and lower lows and lower highs and lower lows. But we've come into, let's say, the extreme swing demand level, and we're expecting that next swing high low to go. And this is a high probable area to get in long. Okay. Ideally, we want to be doing it before price gets up to here, right? Before it gets to that protected / strong internal lower high, right? This is what I was trying to say in the advanced video, but this is a bit more of a better visual representation, right? So we can come into level, we see our entry model, etc., and we want to get in long here. Ideally, it tags us in straight away, because then when price moves up and we're running in profit, now we can either take partials, we can remove our risk, we can trail our stop loss, but essentially remove our risk is the point I'm trying to make, because then what can happen, obviously, is that bearish order flow can continue. And what I see happening far too often is people get in maybe in good areas, or they see the entry model set up, but maybe like price doesn't pull back and it goes straight up first. Then they draw on this, they go, okay, well, we've had a bullish M15 chock in our extreme M15 zone, or even just an M1 chock, but it's a great level. But then price comes down, right? And then it smashes them out. And the reason why is it's because we've come up and we've mitigated the supply range, bearish order flow has not been broken, and we've gone off. Now, obviously that doesn't have to happen. There can be times in which it works out, but this is just to try and improve your strike rate as much as possible. So if price goes up like this and it doesn't tag you in initially, okay, what are some things you can look for in this instance? So what I mean by that is price has come up and it's come back down, right? So at this point, as it's coming back down, you really want to get long because you have a high conviction this move is going to go. But what can we wait for in this instance if we didn't get tagged in here, right? Because now we don't want to be buying against this, right? So sort of three sort of main things you can wait for, and I've listed them here, 1, 2, 3, sort of in order of, I guess, probability as well, right? So the highest probable one is we just sit on our hands and we wait. And ideally what we wait for is we wait for that bullish IBOS, we wait for the bearish order flow to be disrupted, so then we are buying with the internal structure aligned with the swing structure. That's always going to be the highest probable thing. But obviously sometimes if we're working within a smaller range, we might, there might not be enough room. Sometimes it can go, it can have a little pullback and it can just go and we don't get in, etc., right? More confirmation doesn't always mean you're going to get in the trade. Okay, so that's going to be the most ideal, is you wait for order flow to shift on your side. Cool. The second one is you wait for the weak low to be run. So what do I mean by that? Well, I mean, as we come up here and we start coming down, right, this is that weak larger internal low. So instead of just trying to set a limit on here and buy from it, what you can wait for is you can wait for price to actually break it. Because sometimes what you'll see is price will break it. It will mitigate some orders deeper in that extreme zone, right? And it will sweep this low and then give us our entry model, right, say on the M1, and then we can get in long, right? We've waited for that low to go. You want to see it get swept first before then trying to trade it. So now you're in long. Now not worst case scenario, but like, let's just imagine it's just a pullback. At least then you can remove your risk. Maybe that internal lower high stays and it continues, but you've got in at the start of that pullback that you're hoping is going to turn in to what? Turn into the IBOS. Right, so that's your second option. So first option is always going to be the most ideal one, which is you simply just wait for the bullish IBOS, then you buy here with the internal structure. The second option when it's coming back down is you just wait for this weak low to be run. And then once it's broken, right, if you get the next entry model, like, all the other confidence being present, you can get in long here, right? And then at least if, again, like I said, if the larger bearish order flow stays bearish, at least you're basically playing that pullback, you can remove your risk, and then if it comes back down, right, you're fine, you've covered yourself. But it could turn into that movement because that's the movement we're looking for. Right, so that's your second option. So that's what I mean, play the pullback with the potential that order flow could switch bullish. That's when you've let that weak run go, that weak low go. And then your most sort of lowest probability one would be wait for the lower time frame order flow to switch bullish. So what I mean by that is that price comes into this extreme zone, you're not setting your limit here, right? But you're anticipating or hoping that if price comes into here and then you see, you see a shift in order flow like this, right? Now you could buy that because you're basically paying a confirmation entry of the extreme zone from a weak leg, right? So this isn't ideal because you could still get that signal. It's like a trap and then it just gets smashed, right? And then the move goes. And that's really why that's the worst option, but they can play out. Okay, so these are things that are a bit more advanced, but there's some, some scenarios for you to think of. But yeah, they're definitely in order of importance. So let's take a look at sort of a typical example of, well, just how order flow can potentially, help us to avoid some losses by, when we can trade against it and sort of when we should maybe decide not to and wait to sit on our hands to see if it will shift in our favor first or not. So let's do some super quick hard time frame analysis. The 4 hour was bearish and then we had a nice big break of swing structure there to the upside. So we are bullish, but we've had obviously a break of structure. What do we expect after a break of swing structure? We expect a swing pullback. We have had a 4 hour bearish change of character, right? So we're just taking that low there. So we have to, assume that that's the first potential sign that we're seeing weakness come into structure and we could see that pullback. But for now, that shock, right, what that could just little be is a pullback into this sort of smaller internal low and this demand could hold and we could, get a bit more of a bullish continuation, right? So if we jump down to the M15, let's quickly see what swing structure we are working within. So M15 swing, that would be that last break there. I think we failed to close above that high. Let's have a quick double check. Yeah, so that was a sweep of liquidity. And then we had a bearish break of structure there to the downside. So we know from a M15 swing perspective that the M15 is now bearish. We've had a 4 hour change of character. So there's a lot of signs coming in. Obviously, it's quite rush analysis because there's a lot more we could look at here that would probably, there's increased probability that that larger 4 hour pullback, that swing pullback could be starting to kick in. So if we were to draw on that M15 swing range, we know we have that as well. And then we have the smaller internal ranges within that, right, that we can see. But just kind of draw on the recent ones. But you can see from Asia, so that's midnight, it's just been continuously selling up. We've had order flow clearly bearish this entire time. Nice sustained textbook bearish order flow really. Now we're coming into that 4 hour level. So, there's potential that this could continue, or at least, the very least, we could see an M15 swing pullback into the prior swing range because we know that this is our strong swing high and we look to play that move. So what would be the most aggressive way, I guess, of trading this once we come into, we've got, let's see, what do we mitigate? Yeah, we've got refined M15 demand within the 4 hour demand zone. So most aggressive way is to jump into an M1 entry. So if you get your M1 entry, what we were saying before, right, is, if this meets your plan, that is, ideally, if you're going to do that, in terms of order flow, you want to be doing it where you can get in before price really pulls into that prior range. Because if you can get in and then price pulls back up, you can remove your risk. Whereas if price pulls back up to it and then is coming down, right, there's been no break of structure, no disruption of that bearish order flow. Now you're trying to trade against that, right? 9 times out of 10, this weak low is going to get smashed and you're just taking unnecessary losses, okay? Cool. Other thing we can do, or typically wait for, is to wait for a bullish change of character on the M15. All right, so that clearly fails. And then we get a nice change of character here, right? Cool. So now we could start to look for entry. So let's dive down to the M1 and go, okay, basically what we're doing here is we know the M15 is bearish, but the 4 hour is bullish and it's coming to 4 hour demand. And we've had a bullish M15 change of character. Therefore, we could look for some longs from within here to at least play potentially an M15 pullback, right? That's kind of, the general basic logic behind looking for longs from here, right? So we know within 4 hour demand, we're just going to rein it in so we can focus on price. So we've had that bullish change of character here on the M15, right? Now, if we look at the order flow on the M1, let's do lower time frame supply, right? So that was kind of like that last supply range that we had. And then we broke up to the upside. So from that last range, from the high to the low, drag it across is obviously demand. So lower time frame demand. And then what we did? Range initiation, mitigation. So we actually came in, did we mitigate the smaller range without that? Yeah, just about. So obviously there's ranges within ranges, but the larger one is the one, that's the obvious one, right? And then again, from that high down to that low, that's the next M1 swing range, and then break out of that. And then we break out of this, and then we get that M15 bullish. Wait, what happens here? A bit of a gap, change of character. Oh, okay, so me just play this forward a bit. So I don't know why the candles changed it. It's kind of messed around there a bit, but let's have a look at the M15. What's going on there? It wasn't like this in the live market, I can tell you that. So we definitely did get a bullish change of character. I think they just messed around with the price data here a bit. So it's kind of messed up the order of the explanation that I was going to give. There we go. See, here we go. But essentially, let's bring it back. I can try and do it as I wanted to do it. Hopefully it doesn't mess up again. Is it going to mess up? No. So at this point here, we had the bullish M15 chalk, right? Now, if you're going to look for longs and you didn't have all of this drawn on, typically, you know, there's kind of three levels in terms of POIs on the M1 that you could look at. So let's draw those on first. So you got this level here. You got this unmitigated level here. All right, and then you got this unmitigated level here. Now, really, from an order flow perspective, the only one that makes sense if you like everything and if you wanted to get long, really is the nearest one. Because we know we have this bullish order flow. So as prices are coming back in, this should be a strong protected, you know, M1 internal low. Obviously, we don't want to read too much in just to the M1 on its own, but in terms of if you're happy with everything else you've seen in the higher time frames, if this was a type of trade you would like, in my opinion, it's not that great, but if you would like it, really, in my opinion, this is the where that's going to make sense, and you would at least just target that weak high, right? And then ideally try and remove your risk and see if that bullish order flow will to continue. Now, the reason why that is the highest probability one, is because if price was to come down and we get a disruption of that bullish order flow, especially if we get a closure below and that IBOS, right? Then what? Then we would expect that bearish order flow to continue until what? Until it takes out this week low. At that point, the start of this trend has essentially ended and failed, and now this is going to come down and take out that low there. So when we move it forward, as you can probably guess, we get that break and closure below, which now means that from the low to the high, we now have our supply range. Okay, just going to rein this in. So now anyone getting long from here, right? Boom, yes, I'm in profit. Going to pass my FTMO challenge. Tell mum I've quit my job, like blah, blah, blah. Right? Oh, damn, why did I get smashed? I thought, you know, M15 chalk and 4 hour demand. Well, it's because order flow is now against you and it is bearish. Obviously, there's more to it with the other confluence and stuff. It's not necessarily the best area in the world to be getting long from, but the point I'm trying to drive home here really is about the order flow. Just going to rein this in, just to where it broke, right? And then again, it could come into the extreme. Now, don't get me wrong. These zones could play out. It's not to say that we're, again, still working with probabilities here, but this is just a framework in which we can use to understand why if we get long from here or we see price bounce from here, it's likely what? Just to produce a pullback into the prior range to then go. So what would we want to see? We would want to see that range get disrupted, ideally that movement there, and then potentially we could look for longs, right? All those things considered, right? That's the type of thing you would want to see. So let's see what happens. Bit of a bounce again, think it's going to work, it's going to work. Okay, nice reaction. And then I get smashed. Why? Well, because order flow has just continued to be bearish that entire time, right? So that's just some things, you know, you can wait for, especially if, you know, it's just always as simple as prices come into a level. We've got an M15 chalk. Okay, now I'm going to get long from these levels, and then now I'm down minus 3R, and I hate this sucks. You know, screw trading. These are the types of things that you can wait for you know, a bit more confluence in this instance, right? Wait for order flow to shift back in your favor. Ideally, we get that break, and then potentially you could look for longs from within here, okay? So even if we had got, like, price came down into here, right, and then gave us an M1 chalk, right, that chalk is just what? It just signals an internal pullback. It's just going to signal that move. Doesn't necessarily mean that we're going to get that. Now, you might want to take that, and that might be fine because you could love everything else. But it's just understand that's only once you get the IBOS, and then we expect those, you know, that shift in order flow to really hold and continue to the upside. So that can potentially help you understand some of your losses. So yeah, I definitely recommend going back through some of your recent trades, map this on the charts, especially if you've still got the trading view data, and if it's still there on the live charts, and go back and just really investigate and use these concepts and see if they can potentially help you avoid some losses or not.